All right, ladies and gentlemen, I got your watch list, but there's the stock market. That is the last 2 days, almost 1,000 points, but I just wanted to film like this so I could get the screenshot again. But we need to talk about why the stock market went down today, so I have your watch list for you guys. Make sure you are subscribed, drop your thumbs up on the video, and I don't know, man, why is the light looks so blurry? I don't know, man. I don't like it like that. Maybe we're gonna have to switch the view. All right, man, let me, I'm just gonna get to this. All right, like the video, post your watch list, let's go, baby. I did forget something. We are live Monday through Friday, 30 minutes before open. It's the first link in the description. It's pinned in the comments right down there. Okay, all right, I gotta go. That was weird.
Okay, that was just doing too much. I love that thumbnail, but I have your watch list, ladies and gentlemen, so I hope you're ready. I'm going to go over some of the keys. We're going to talk about the plays that we made today, but I really want to talk about why the stock market went down today, because there was a few things, actually a ton of things. All day was literally littered with news. So remember, this was yesterday. We saw a drop, and today's drop kind of looks similar, and percentage-wise, they were about very similar. But we were down about 1.5% at one point. But today was very interesting. And, the question is, what caused the drop and why? And I think a lot of people didn't know this. There was so much said in the morning. There was some like Russia or some NATO meeting or something like that. But you heard from a lot of world leaders. But now what Trump said, he said a lot of stuff related to the trade war. Now, this is kind of a low-key bomb, I would say. Again, it's very, very hard to say. But the trade deal could, again, for what we're expecting in December, some people are saying it's priced in, and they think it's going to happen before the end of the year. But again, with what Trump said, and he said it so early in the morning, it's not looking like that to be the case. So I kind of want to run through what happened here. I'm going to give a loose guideline of what was going on that caused these drops even throughout the day. There was a few things that we could take for the future and how to plan ahead. And it's even kind of changing my strategy approach to this. So hopefully you guys are ready for all this. But then at the same time now, we still have to wait to see what happens, because there's a lot. So even today, and simply what caused the market to come down, these were the comments in the morning. It was two parts, but it was related to the trade war. And then most of the stuff, literally 2 minutes before the market opened, Trump was also talking. And all the way through this pretty much drop. By the end of Wilbur Ross speaking, that's when the market started to bounce. But again, you saw I looked at like a carbon copy of yesterday to a degree. But simply, it dropped on the headline. Let's see. I wrote it down. Here's not the exact quote, but something along those lines. But this was probably around 5 in the morning Eastern time, so 2 a.m. Pacific. But Trump was like, we're doing well with the deal, or with China, and the deal is dependent on whether or not he wants to make it. Then the next thing he said, this is where I said it could affect the future. Trump then says there is no deadline on a China deal, and it might be better to wait until after the November 2020 election. So that is the piece that could change a lot there, because that's saying a lot, again, of what the market's pricing. And this would literally give us a whole another year of this trade back and forth. So again, they're saying end the trade war, this and that. I thought we're still on phase 1, so keep that in mind. But then shortly after that in the morning, there was news about White House considering kicking Huawei out of the U.S. banking system. And then Huawei came back today early in the morning throughout a later time. They were going back and forth saying that I believe that was yesterday too. They're going to Canada and then all this other stuff. But again, this is all before the market opened, because the question is, even this morning, futures were down about 0.5% or a little bit more, pretty much where we were today. So the question is why, and it had to do with Trump's comments regarding that. But then the Global Times editor pretty much says that the U.S. appears to be backpedaling, and that China's going to keep their stance and they're not going to change anything, and that they're ready to make the deal, but it's up to us in a way. So kind of solidifying what Trump says, but both of these have been taken negatively. Now, the market took that negatively. Then 18 minutes later, you see the Fox reporting that we're still going forward with the December 15th tariffs, and then it literally just becomes a flurry of headlines all through this drop. So again, all of that stuff, even the Fox, that was all pre-market. So all of this is weighing on the market. You had Trump speaking from 4 hours before market open. This is all through that NATO stuff going on. And he's talking about everything. He brings up literally everything. And even at that point, even in the beginning, he was talking about France, NATO, Germany, threatening tariffs on European Union. Then he started talking about China. So all of this stuff, there was a lot of global stuff. Even Vladimir Putin spoke today, the French president. So there was a lot of global tensions, or at least a lot of global stimulus that weighed down on stocks. So that's why it kind of gave us this move. After all those talks stopped, you saw what happened to the market. So this is going to, again, be interesting with how we need to play this and what we're setting up for. So if you saw there on that document, I had a few of the keys, but that's what it's going to be relating to and saying what type of plays do we play here. And then essentially what's going to happen, I kind of have a prediction or an expectation. However, I'm still looking for my expectation for the end of the year, the one that I already put out. It seems like it's playing there, and that's even part of what we're seeing here, even with some of the option pricing now. It's getting a little difficulty, but there's definitely opportunities peeking their head up here. So let's talk about that. But I think I told you guys, like the video, subscribe, and oh yeah, the most important thing you need to do, post your watch list below. Let us know what you're looking at. Source that info. Let us know what you're looking at. And yeah, that's pretty much it. But bringing this full circle, we've already talked about what dropped the market. And again, now there is some comments. I think I might even make a separate video on this because I think we kind of need to circle back and get an idea of where we're at with the trade war and everything going on, because now this is a lot of comments. And even towards the end, you know, there was like the direct quotes from Wilbur Ross and what he was saying, but he pretty much brought up the Hong Kong situation. He said it's a new variable in the China deal. Then Trump said he's under no time pressure to get the China trade deal. So again, while Wilbur's talking all throughout the markets hitting lows, but he said they will get a deal. But another thing he even hinted at is that it pretty much even confirmed what Fox said in the morning, that there's no real reason to delay the December 15th tariffs. And said there's no real reason like substantive progress in the talks. So that's even showing that they really haven't done or accomplished much when it comes to this trade deal. Then there was also, I think he even just finished it off with saying stuff about there's a legitimate claim against the U.S. Countries. You know, Trump talked about the digital tax and that they might even pursue tariffs on other companies or countries for the digital taxes. Again, all of these developments occurred, but now we have to watch out for this. So now this is kind of bringing me to the keys and what to be looking for. You know, we were talking about it at the beginning of the week. You know, it's only Tuesday, and we got to kind of see yesterday and how today closed. Now, we were saying some of the spreads, I still have them in mind, and I thought I made it kind of clear in yesterday's watch list. Even with some of these deep in the money spreads, as long as they're in the money, they're going to hold that intrinsic value. So even if we choose to get them Wednesday, Thursday, Friday, it's pretty much going to be the same credit. Again, it depends where the underlying moves. But in this case now, spreads can be good, but if there's bigger upside for the same risk, you might want to take it if we're with considering the climate we're in, because we might start to see some big moves. And again, this isn't my prediction just yet, but I do actually, well, it kind of is. I think big moves either way. I'm more leaning to the bullish side, but we're seeing how all of this stuff, again, you got the Fed coming up on the 11th, then you got the tariffs and all this other stuff. So keep all this in mind. But that's why I'm saying if there's big moves, you might want to take more risk. But now some people were saying, you know, we were looking at an earnings play today. We made it on workday, and I wanted to do an iron condor. I didn't really like the credit or just even the box it was in relative to the credit. And someone said, do a spread instead. But I said, you know, even if I did a credit spread and it's paying me like a $2 credit, and I'm taking a $50 in risk, if there's a way for me to play it, $50 that still has a pretty, you know, if it's already a low probability credit spread paying that much in credit, I could just buy instead of do the spread. If there's going to be a wider move, it would be more beneficial to go with the purchase rather than go with the spread. Because in both instances, it's still risking $50, but one, you know, the spread's easier to win. However, if we are at this kind of moment where kind of big moves could happen, it might be beneficial to avoid this spread. So I'm still keeping some in mind like that HD one, but keep that in mind itself. But you guys got to snipe around here, you know, and again, even where we are and looking forward, you know, some of the keys I'm going to be, you know, for you, me, myself, what I'm waiting for is I want to wait for confirmation, and I want to sprinkle some plays out there. I don't want to get too into it. The puts were really expensive today on this drop. There's, again, a lot of negative news, and you know, think about all the headlines and everything that was discussed. This is going to factor into the option prices and what market makers and people are pricing in. So just keep that in mind and be careful. But that's why you want to sprinkle it, control the budget, go little by little, and you'll be good to go. But then lastly, this is kind of what I'm expecting here. I think it is a big buy the dip or sell the top opportunity. Again, we got that down Friday, down Monday, and next week could really confirm it. If we see, again, a sell-off into Friday and a sell-off into Monday, that'll really look like something, but we could start seeing volatility really pick up, because at the end of the day, it's been 3 days or 2 days, 600 points. It's bad, but not too bad, especially when you consider the amount of headlines and how At other times, when the trade war was still kind of newer and we haven't been as seasoned to it, markets were responding a lot more violently, and it does help with the repos and other stuff in that nature. But if anything, what I'm going to be expecting is, slight volatility and turbulence into the end of the week. We might test the near low, make a cool little bit of a bounce back, and then we're going to come back to the lows and the equilibrium by Friday. Thank you for flying with the Colt. No, but in all seriousness, though, I wouldn't be surprised to see us kind of go towards that low we saw even today, and this is going to be a crucial point. Literally 307.70 or 307.30 or even just 307 in general. If it breaks below there, it goes to those next levels around the 306 to 304. That's if it breaks on the top end. You guys remember it stayed up there for a long time, but then again it gapped from there on that 304. Again, that was just the beginning of November, so you guys remember. We've seen patterns like this too. You can take July to August. We've seen us go up a bunch and, kind of slowly hit and break out to new high. And then in a few days, literally, again, that was a Fed meeting, but 8 days later into the month, it's already given up all of those monthly gains. So, but essentially, I'm expecting it to come in on a Friday here where we're testing these 307, these lower levels, and then it could probably come around 307, even 306, or even just hang around this level, have a big rip up on like a Thursday or something, and then by Friday, we're going to come back to this level or kind of base around either this 309. It's hard to really even say where equilibrium is, so we'll see. And then if that leads to another down Friday, down Monday, then we might get something bigger. But who knows? That's just kind of what I'm feeling here. But I think there's a lot of information and a lot of things on the way that we're going to see. So I hope you guys are ready. But let us get into the plays. So I got a few different companies I want to go over and even an earnings play I want to talk about. But then we also have the plays that we made today. These were all of them. So again, it was a matter. I spread a decent amount and we did play an earnings play. But I was trying to sprinkle a little bit and I played one for news, one for cheap. The key I tried to get, I got time on all of them except for the earnings play. And that was the idea. Spend a little bit amount of money here. But again, when you're buying multiple companies, it adds up. About $150 between all these plays here. But we got different exposures with different reasoning. But I played an XLNX. We got a December 20th 80 put for like $40. I wanted to play NVIDIA and some of the chip makers, but they were all pretty expensive. XLNX is a post-earnings continuation play. Remember, they had earnings a few weeks ago, but the fact is they're hitting this low, and they're really breaking lows with a lot of volume on the downside. So, again, they're at a crucial yearly low. They're dropping. The chip makers are getting killed. This isn't like AMD, NVIDIA, Intel, or anything like that. So that's saying something. But then we also played Intel, and I got another play. I got two of them, so I spent $60. Actually, no, I spent $180 total for all these plays then. But this was for 2 weeks out, and I got a 52.50 put on Intel, and that was because there was news today that Amazon is getting into the chip industry. So usually there's that Amazon effect. They dropped for a little bit and came back up, but they're kind of the reverse of XLNX. So they got the bad individual Amazon effect, but now they're dropping from a all-time high versus being at a all-time or yearly low near one of their yearly highs. So it's a good spot to play them. And again, Intel is a lower volatility stock. So I was even, I got a little greedy by getting two, but that allowed us to even get a decent play with a decent amount of time. Again, if there is any of these big moves for $30. Then the same logic even with McDonald's. These were a little further out, and that's what I even said. These were for next week, and I got a 185 put for $30. And I was saying, McDonald's really fell through. Kind of, approaching this. They're not at a yearly low. They're still at some highs here. It's a little bit different than XLNX considering McDonald's was on the uptrend. But really in the last 2 or 3 months, McDonald's has really turned around into a downtrend here. So if they break here, that's one thing. But $30 to really just get right outside of their low that they were just at last month, I'll take it, but the issue is the lack of time. So I was trying to keep it cheap on there, but I like the McDonald's. And I got Facebook. Same logic, but kind of just getting more or less in on the thing. That one probably I don't like this one as much, if anything. But we got the 182.50 for 47. But the key is at least to get some time or even into next week, especially if this volatility is going to persist. But again, these contracts are going to go crazy and be all over the place. But those are what we played today, but that's pretty much it as far as what I'm going to be looking at now. We have all these companies. I will tell you guys the earnings play. So hopefully you made it this far. Shout out to Cole, baby. Shout out Chad, baby. Let's go. Get your head in the game, baby. You blessed. I'm blessed. Let's go. I got a little too hyped there. But Ulta, I kind of like it. I see the play we have, and again, now I want to see how some of these plays you see, but there's something I'm kind of getting drawn to, these companies at these highs or lows, especially with this volatility moment here. But Ulta dropped on the earnings. They're hanging out. Again, we bought that one play. It's depreciated because it was a super far out the money play. But the fact that all of this stuff's happening in their holding here, this is clear they're waiting for earnings. And investors are pretty cautious with that valuation. But right when the earnings comes out, I think this thing's going to move. So I know it's met the criteria. The options are getting cheaper. I'm really going to start looking to set up a play on Ulta. If they report this week, I need to double check. But don't have a specific play, so I mean, if anything, come on the stream, better get your stream alerts if you're going to miss it. But I am going to be looking at Ulta. And again, things can change. I may not play it, but it did catch my attention especially when I was putting together this watch list. So that's your potential play. Everything else, I'm going to be watching McDonald's, watch CRM. Again, these were earnings play. We played the workday. It was a dud, but I was saying I didn't expect them to move again. They met the criteria, but they were a little bit too expensive, and they're not really a big mover. Same thing with Workday. That's why I even said it today. I didn't like the Workday, but I said maybe they could. They even had a big beat. They were up a decent, but then they kind of came back. Again, you guys remember that pattern, what we've been seeing, so watch them for a continuation play. But the key that I did with this is that I cut the amount in half. Instead of spending $100, I spent $60 or $50 to play it both ways. So I cut the amount in half. So whenever I'm uncertain, if I still want to play it, I just cut the amount so that I'm not forced to go in on it, or I could reduce the risk but still give myself that exposure. So watch them. Watch HD. I'm definitely keeping my eye on. I'm surprised they sold off, and they really sold off throughout the market. The premiums are interesting. Same thing with McDonald's and Intel. Then there's going to be Facebook and then Amazon. My spreads on them, they're going up and down, but I still kind of like the play, but I think we might either need to get some more time on that play, even though they're till January's, or I might want to get more. But Amazon's at an interesting place too. If you really think about all the companies I'm getting drawn to, Amazon looks to be meeting that pattern as well too. So again, looking at everything all across the board, we're coming into some big stuff here. So watch those. Then TLT has been on fire. Went up like $3 at one point. Remember I was saying yesterday, even today, I said it could be the play. Going to keep my eye out for it. I like it. Contract's gone up on it. It's just a lot of activity. Again, coming into the Fed and everything on the table. Maybe Trump is even doing this to dictate the Fed, but the Fed may not be there to save us this time. But again, if the Fed doesn't cut, or maybe they even give a cut, I don't know. But if the market takes the Fed good, that could even be beneficial, or at least even help the case that maybe we do see the market bounce up coming into December. But watch TLT, watch Shopify and Roku. Shopify went up 6% today, $18. Our spread is actually up. Remember that swing trade from last week. And then Roku's up 6% again. This could be that shitty stock rotation, but again, to a more of an adage, if we start to see a bounce, some of these plays could go crazy where if they start to go up, Roku maybe not as much because they dropped a lot, but Shopify looks a little bit better. It's kind of getting into an uptrend there, so watch out for that. And if we do start to see the market brush all this other stuff off, those shitty stock rotations, the ones that keep going, are going to be great. That's how Roku even had its last run up last time. Then watch Biogen. Again, the prices for the options have been going crazy. The stock is a little bit moving, but they have that drug stuff coming up. It's going to be pretty much any day now. I still want to sell premium. I kind of might look into it. We'll see. So I might try. I want to actually try to see what I can get filled on the premium tomorrow. I'm going to look at that. And then lastly, like I said, Ulta, watch AMD too, again, from the chip maker perspective, even relating it to that Intel news. Then there's VMware. Our contracts came out the grave. The volume is picking up, and the volume was huge today. This is saying something about the continuation plays. I like it. Our contracts went up to 100% today. They're at break even now. So again, there's going to be some frogging opportunities on this one. So watch them. Don't forget about Disney. I still like them. They still were down a little bit, but maybe even for the long-term portfolio, we got to support Elsa, you know what I'm saying? And then XLNX and Intel, like we said. And that's your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. Keep it cool. Don't get any FOMO. Let it come to you. It's going to be an exciting market. It's going to be an exciting December. So I hope you guys are ready. I need your head in the game. Don't force it. We're going to snipe some plays. It's going to be beautiful. I hope you guys are ready. So get ready, and that's it. And let's go!